crosses, we'll cover crosses and also add crude oil to the mix. So we'll start with Euro Swiss. Euro Swiss, now we're seeing the strength of the Swiss franc, some safe haven flows into Switzerland with those terror attacks, with those violent events in Europe. And the Swiss National Bank has apparently been asleep at the wheel. Usually they intervene when your Swiss falls too much. They want a weaker Swiss franc. So 106.20 is a level they'll probably defend if the pair falls further. That has been the level around Brexit. Okay, 107 and 107.60 used to be a line in the sand for them. Their preferred range is between 108 to 110. Euro, pound, relatively stable. The euro and the pound have fallen against the dollar in a more orderly fashion together. Better than the Brexit negotiations so far, at least. 84 is the current level. It's level, 84.20 is resistance, followed by 84.70, 85, a round number, 85.80, and 86.50. To the downside, we have 83.40 and 82.80. Okay, euro pound a bit more choppy than it used to be. It had very nice trends earlier this year. This is, of course, the Brexit move, and we had consequent rises above 90 and falling back. Now it's consolidating. It's trading in range. Euro yen, 122.40. The fall of the yen meant that euro yen pushed higher because the euro didn't fall so much against the US dollar. Currently, the pair is trading at 122.40. We have resistance there at 123, 123.70, and 124.70. These are older lines. Let's see if the pair respects them or not. This is a cross that bankers like, but traders not so much. 121.70 and 121 are to the downside. And now to a trader's favorite, pound yen. Okay, we had a high here of, well, not seen, I think the highest post-Brexit, yeah. So the big fall of the yen meant, and the relative stability of the pound, hopes for a soft Brexit, pushed this cross higher. You talked about 1.2 at the end of the year, or quite far from that. That would take a big fall. The low, seen post-Brexit has been 125, more or less, a bit under 125. Currently, we're at resistance there at 148.50. Huge volatility. I would mention also 146 currently as a line of resistance, but a few days ago it was support. And choppy ground until 143 and 141.75. Of course, the round number of 140 and the round number of 150 sort of are at both sides of this range. I'm not sure. Well, they don't have a technical significance. They're just very round numbers, but this also means something. Usually, it's important to stress that round numbers are more important with major pairs than with crosses. And we'll finish this roundup of crosses with crude oil. So we're seeing a gradual rise in crude oil. Remember that usually there's an inverse correlation between oil and the US dollar. So we're seeing the US dollar strengthening and oil strengthening as well. Breakdown of this correlation. Sorry, just a moment. Sorry for that. I hope you can hear me now. Anyway, WTI crude oil at 53.65 at the moment. Resistance 54.50. That's the high level post OPEC. It took oil prices quite some time to break above that 52 level, which was, if you can see here on the chart, well, a double or even triple top here. So I would define the range currently as between 52 and 54.40. Currently moving higher in the range on hopes that this deal will go through. It's not only OPEC, it's also another group of countries that have pledged to cut oil production. Remember, it's from January. So actually oil production has been on the rise from these countries ahead of the implementation. But so far, there are signs that the implementation will really go through. So this is the current range. Above that, we can talk about 60. These are levels last seen in 2015, last year, and underneath we have 49. Okay, so that's a roundup of crosses.